Alrighty, what is going on, guys? Welcome back to a brand new review. Today, I'll be talking about how I'm up a little bit over $7,000 day trading. Let's get into it. So, coming into the session, first off, we ended up trading Asia last night. Asia was a pretty tough session last night. Usually, what I find consistently is through Sundays, through Sunday opens, through Sunday Asias. It typically tends to usually trade well. I feel like the last 9 out of 10 sessions, Asians trade really well through Sunday night. That's typically my favorite day of the week. With last night specifically, we had a beautiful open where we ended up seeing a small new week opening gap get created, which if you don't know, it's Friday's close into Sunday's open. You see that happen here. We see a good push past this internal high. Then we see price ultimately look to draw higher. And so my bias coming into this ASA session, right, with seeing price looking for continuation, creating constant higher lows, my thesis was we could potentially look to draw higher. That's more so what I was looking at here. So we end up coming into the open again, being bullish, trade bullish, higher lows being created through higher time frame narrative in Asia. What we ended up seeing, and the reason, partially to why I was bullish, was because, not only was the open off Asia bullish, but we were also seeing price through the hourly on NQ trade at a very bullish state as well. If you see the previous day, Friday, through New York was very bullish, right? So we ended up seeing price through NQ coming down, taking an area of liquidity, through ES and NQ, SMT a bit, saw a bit of bullish SMT. We then saw price come back up, and then we then saw price just continuously build back up, inverting bearish PD rays. So naturally, I was already slightly leaning towards upside through the hourly and the 4-hour time frame, just because we were bullish. But on top of that, through the open of Asia, I was leaning towards upside as well because we were looking to essentially see continuation. And my conviction had price wanted to come back down and seek lower. I initially thought that price was going to see that new week opening gap fill and then move off of there. We did not. We ended up seeing that first 5-minute candle off the Asia open be very bullish. And then I more so proceeded to look to mark out higher time frame levels in this 4-hour gap fill, daily volume and balance fill, and this 4-hour internal high. In terms of our first trade of the day, it ended up being a 5-minute gap tap. This is a half risk trade. If you guys don't know, we have a sizing plan in the community, and you kind of see me mention, the idea behind this trade right here. I said liking Asia looks like to be seeking continuation off Friday's New York. I also like higher time frame draw, some clean levels higher. We could draw into as long as price continues to trade at that state it is. Idea is 5-minute gap tap here, then go. If we could also get a 1-minute gap, 1-minute IFEG entry on the way up would be clean, close to A plus in my opinion. Would like to be would be 0.5 on Lucid. So essentially, like I said, right, higher time frame was looking bullish through continuation off of New York Friday, and Asia was looking like it wanted to see continuation off of what it was doing Friday, right? So you see this price sequence here. You see me more so eyeing a 5-minute gap tap, a rebalance off that 5-minute gap, price showcasing interest back up with good confirmation. We do end up getting this trade. The trade ends up giving the entry, right? I am long 0.5R. You see me mention in terms of the actual confirmation, the perfect confirmation on this trade right here specifically, your confirmation off our model is simply right here at 7:13 p.m. Eastern Standard Time. 7:13 p.m. Yeah, it is 7:13 p.m. Eastern Standard Time, correct? We ended up seeing price essentially just kind of consolidate initially. We were in the money initially, but then price just came back down. Now, with this trade specifically, I'm not going to kill myself over. I'm not going to be too upset about because this was a trade where we were simply looking for continuation. We had all the components. It just simply did not pan out. Price clearly did not have the interest in drawing higher at this moment in time. And so specifically, we ended up seeing price start facing lower highs and seeing, a move down lower continuously. So a pretty, you know, annoying trade to be honest, right? It was a good setup in my opinion, just did not pan out. Asia started consolidating. Price just furthermore wanted to retrace. With all the components that we had for this trade specifically, I was content with taking this. Had price not been as bullish, had higher time frame not been as clear, had bias not been clear, had entry model not been good, you would have seen me not take this trade. So that's it. With this second trade here specifically, this one I'm a bit more upset about because this is a trade in where we end up taking through pure consolidation, through pure chop during Asia. If you guys know me, I'm very, very, very cautious when it comes to trading Asia because we know how consistently choppy it could be. Asia is predominantly known for being a consolidative session. Not maybe as of recent, but typically it doesn't trade at the state in which New York trades. And so I was a bit more weary and a bit more cautious of that but I still ended up taking this trade, which was a trade that was not a great entry. And this is a trade here where, Lance, what are you doing? We end up seeing price come back down here after initially getting stopped out. Now, my bias was still higher, and I completely, hindsight reflecting back, I'm fair, right? I'm still fine to be bullish here. Nothing wrong with that. But specifically with this trade, you see where we take entry, and it's after just a bit, 2 5-minute candles of displacement back to the upside is when we took our trade. After seeing, hours of manipulation, hours of accumulation, hours of consolidation here, right? So you see us get stopped out at 7:45. We then take this trade at 9:10. So about an hour and 30 minutes later, you see me re-enter a trade after clearly seeing that price was nowhere near trading the same delivery in which we was initially trading, right? The reason I sparked up interest through Asia was because off the open, we were seeing these big 5-minute candles here, which tells you that price was seeking follow through and volatility at this point in time. We were not seeing that happen here. Price was very consolidated. So this is a trade I should have completely avoided, even if there was an entry model here, and even if my bias was bullish, mainly because of the fact that price was not good. It was not. So a bit tough here. This trade, I'm a bit hard on myself. Stop idea was a swing low. That was the invalidation point. Good invalidation point because we ended up seeing price trade much lower. The entry in itself wasn't bad, but price collectively through how it was trading before the trade was taken was bad, right? 5-minute gap here. You look at the range of an hour and a half of data here, right here, compared to this 5-minute candle. 1 5-minute candle tells you all you need to know, right? Very choppy. So this is a trade, simply put, should have not been taken. Furthermore, we then end up seeing price through Asia and let it come back down here. We see price trade past that New York opening gap. And then we put in a significant low coming into this New York Open, which is why I also looked to be a bit more bullish. And I was convicted in taking a trade through New York. After being wrong twice through Asia, I simply, moved on, right? Obviously a bit of reflection, but I'm not going to revenge trade. I'm not going to shy away. I'm not going to be scared. I'm not going to be fearful. I'm not going to be doubtful. I'm not going to be all these different emotions, as a lot of traders would be. All I know is I followed my system, right? I stuck to my plan. It didn't pan out. So be it. Move on to the next session. Coming into this open, like I said, looking at the 4-hour, we end up seeing price put in a good 4-hour low because we end up coming down here and we end up seeing price through NQ off this wick right here fill this 4-hour fair value gap, right? A beautiful 4-hour fair value gap. And so you end up seeing price essentially retrace here. You see price after putting a low that it put in, come back up, and you see price look to shoot for that retracement in that 4-hour gap fill. Now, had we come back down, inverted it, had we seen price trade past it, I would have not been as bullish as I was off the open. But then you see New York Open create, right? Because you guys have to remember, this 4-hour low that we ended up putting in was a low generated by London, right? And so through our New York opening range move here, right, what we end up seeing price do is we end up seeing price of the New York opening range move come down here, take out London low sell side, and then end up seeing a move back up. This is very good in my opinion because not only did we put in a significant low, but then you see New York off the opening range move here, come down, wipe out that sell side that we created through London, and then come right back up and displace back higher. Then you see my interest spark up again, same bias as I had here for higher draw in here, except this time we had a very good low put in before our trade entry. We then come back up here, we then see price showcase a retrace, and then come back up and look for higher draw. In terms of my entry right here specifically, it was a 5-minute gap, 5-minute fair value gap retrace, right, where we tapped right here, and then a push back up where we ended up seeing a 1-minute bearish fair value gap go invert. The reason you see me take this trade is because I require price to displace a bit more. I want to see price displace a bit more before taking the entry, because we could have very well easily came back down here, retrace into this 5-minute gap, and then see price come back down after initially seeking maybe 1 or 2 buy candles in a 1-minute time frame. We don't see that here. 1-minute gap, entry, boom. We see price then go, and then ultimately we end up seeing price eventually take profit. You see me on the cusp of this trade here, obviously mentioned my idea, right? Boom. I said, eyeing this 5-minute fair value gap rebalance, 1-minute IFEG entry is possible. Take good low off the open where NQ swept London lows, which was a low put in by filling the 4-hour gap. What we need to clear, or what we need here is clear price, would be 0.5, or obviously sizing is determined there. And you guys obviously in the community know my exact sizing per trade as we've discussed it. And so yeah, 5-minute gap tap, see perfect rebalance, and then also a 1-minute gap go invert. Again, 2 bullish confluences in 1 move. That's what I'm looking for here. So I'm looking for that slight more of bullish confluence to take this trade. Let's why not have your break even the sun on high? Well, the sun on high here works perfectly fine. I just ended up keeping my break even at a 15-minute internal high because my conviction was in higher price. Reason being, NQ was the leading asset, ES was a bit weaker, and ES even looked bullish. So we end up seeing price come back up here. Again, that's paired up with everything else, with all the different factors with our bias that we talked about. But then you end up seeing me mention take my trade. I'm long 11:05 a.m. Eastern Standard Time, also executed on live. We then see price come back up here. We take the trade. My execution on this trade, and by the way, here are the executions for the first two trades. Boom, and then boom. And in terms of this New York trade here, my take wasn't the best. Confirmation is right here. The candle closure inversion, 10:04 a.m. Eastern Standard Time. Moment of confirmation. I ended up taking towards the tail end of this trade because I ended up executing on my TPT and personal first, and the candle was so fast to where I ended up taking executions around later here. So my R skewed a bit, but it was fine. We then ended up seeing price come up here, eventually take out that 15-minute internal high, consistently create higher lows. And over the course of this trade here, what you see me do is consistently trail my stops. You see me obviously post up progress pics on the trade. You then see me consistently trail my stops with the community, and we eventually end up coming back down here and trailing our stops off this trade at 25,340, which is where you see me exit this trade at 25,340. Now, what I will say is it's a bit of a bummer because we end up coming literally like 2-3 points away from TP here. And had we hit that TP, we would have been up around $400 per account on Lucid. And I probably would have been up around, more than 40K on the day. But we ended up realizing the day for about a $50 gain. What I want you guys, this is important here, what I want you guys to know is it's important to make sure that you still follow your approach. Some people in my chat were like, Neto, if only we took profit a couple points before that intended TP. Well, no shit. That's hindsight, right? But for me specifically, the importance and the significance of me following the system is very, very key. Very, very key. That's because, today, for example, you could come up here, you could take profit right before TP gets hit. That's fine. You could do that just for today. But if that becomes a consistent habitual practice where you do that over and over again, eventually down the line for the long-term aspect, it'll bite you in the ass. Why? Because there's going to be a ton of times where you take profit a bit early and you end up seeing price shoot much further on. Because for me, in today's trade, I was going to trim one micro here, and my second contract was going to be off this 4-hour internal high. And so it's important to also make sure to follow your approach because, again, once you have that structure, when you have that structure and you're okay and content with whatever happens, right, what you can do is you go back and you can reflect and really review on why certain things didn't pan out, and you can just try new stuff. When you don't have structure and you start guessing stuff, there's nothing you can consistently, look to go back in your journal and reviews like this and be able to look to improve on. So that's more so it. That's why we held, right, follow your plan. Again, we'll go back tonight, journal, reflect, I'll talk to the chat and see what we can do better. That's it, right? Follow our system. With that being said, that's the day. Hope you guys enjoy the review, and I'm going to catch you guys in the next one.